Welcome to the Jason De Sousa Show. Join us as we explore the evolving urban landscape, uncovering the trends, stories, and innovations shaping our cities. Thanks for watching and enjoy today's episode.
Andrew Lamb, welcome to the podcast.
Thank you, nice to be here.
So you are a tax director. You're the first tax director we've ever had on the show. And I think it's a good time to sort of be talking about this because, you know, we're in a period of time when there's been a lot of focus on cost of living pressures, on whether our tax system's right, on business generally, how our economy is going. So I get the sense that those of you who look at the tax system tend to have a real pulse on what's happening in the economy. So it's great to have you on the show.
Thank you, thank you.
So tell us about yourself, Andrew. How did you end up being a tax director?
It's been a long journey.
I should say you're a private sector tax advisor rather than a tax collector. There's a very big difference between the two.
That's important to clarify. When people ask me, what do? I say I work in tax, and they're like, oh. I say, no, I don't work for the ATO side. I work for the client side. So we help people manage their taxes and sort of just comply and make sure that they structure their affairs in the proper manner. There's no one answer to everything, but there is better ways of doing things and things to be aware of when structuring your business, especially for tax efficiency. And
you represent all sizes of firm, do you?
Yeah, so throughout my career, I have worked in both large firms. I've worked in a large law firm, worked in a Big Four accounting firm, in their tax teams. And now my focus is, I'm in a sort of what you call a mid-tier firm, and our focus is on private clients.
It's called boroughs?
Yes, boroughs.
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 I always seem to get that wrong. Boroughs.
Yes.
Yeah.
Yes.
And they're a mid-tier tax practice, are they?
Yeah. A small end of the mid-tier. There's about 10, 11 partners, about 90 staff.
Wow,
so
okay.
It's not large like
Yeah.
the Big Four, but it's not small like a sole practitioner type outfit.
But it seems to me that the firms at that level that are dealing with the mid-tier businesses get a real pulse on what's happening in the economy. Would you agree with that?
Yeah, absolutely. Like we see what is going on, especially with our clients. We sort of see where ATO is ramping up compliance activities. So we're on the pulse in that sense. We know what the ATO is generally focused on in terms of our clients and what issues they're looking at. We also have an eye on insolvencies when the economy is not doing so well. We see a lot of that rise, so we tend to deal with those sort of issues of late payments and trying to make sure that businesses can stay afloat, especially in tough times. And we also see times where opportunities are out there, and there might be businesses that are doing well and maybe acquisitive and maybe looking to expand and buy other businesses and so forth. So in that sense, we do see a sort of broad cross section of the economy. But we also live in Sydney, which is a little bubble in itself.
Well, that's right. But you represent firms nationally, do you?
Yeah, so a lot of our clients at Boroughs are private clients. So they're families, and they're typically entrepreneurial families. Generally, there's a business that has been started by the clients, or it could be a multi-generational family where business that could have been, started up in the 60s or 70s or 80s, and now we have the children or the grandchildren now involved in the business and growing accordingly. Yeah.
So that's a good segue, and you covered some topics that I want to get into, particularly on the health of business generally. But it gets, I guess, Lily, at IR Marketing has started her new marketing empire. She's obviously the producer of this podcast. She's a small, soon-to-be large business. Idea Partners is a fairly new corporate advisory firm that's growing, which I'm happy about. But I have to say, starting a business, which is kind of what got me thinking about this issue, is actually a really harrowing, difficult administrative experience, right? Particularly if you're doing it with shareholders and all of a sudden these trusts start coming out of nowhere. And I guess my first question is, 1/3 of businesses, as I understand it, the GDP of our economy, 1/3 of it is driven by small business.
Yeah.
And having a career out of government and large business, I always knew that administration was challenging and difficult. But I never imagined it to be quite as difficult as a small business. How do small businesses navigate this increasing plethora of administration and red tape?
Absolutely. How do they manage it? It's with help. Seeking the right advice, finding that trusted advisor. Obviously someone with a good reputation, generally through referrals from people who've done it before.
Yeah.
They can refer you to the right advisor or accountant. And look, accountants and lawyers, that's their bread and butter. They do it every day. For someone that's starting new in business, obviously, it'll be new to them. So that's why you need the advice and experience of a trusted advisor, someone that's done it before, that has the template. And for that professional, it's merely a checklist, for want of a better word, of things to do.
To go through all the different things.
To go through all the various different aspects, so you don't sort of miss the crucial parts of setting up a business. And look, not everybody needs to know how to file a tax return. Not everybody needs to know what forms to lodge with ASIC to create a company. Not everyone needs to know all of that, because as a business owner or someone who's starting a business, your focus should be on building your business.
On running the business,
on
right?
running the business.
Yes.
Focus on your marketing, focus on your IT systems, focus on employing people and getting the best out of your employees. Your mind should not be on bookkeeping and ASIC forms and stuff, because that's not really value add. So the important thing to do, my advice would be, partner up with a good advisor, good accountant. Doesn't necessarily need to be the big end of town accountant. They might be a bit too expensive. And it depends on what stage of the business cycle you are. You would partner with the right accountant. And some people do, often in their business journey, outgrow their advisor. And that's perfectly normal.
Yeah.
And a lot of, you'd be surprised to hear this, a lot of advisors put up their hands early and say, look, this is beyond me.
I'm a family tax accountant. I'm not you guys are employing 100 people.
Exactly right. Exactly right. So we see that evolution of the client and their businesses, and then their advisors should just match that accordingly.
Yeah.
So, like I said, you don't need a startup business with 1 or 2 employees. Does not need a Big 4 accounting firm, for example. But in 5 years' time, when the revenues go through the roof, then they're employing 100 people, that might be the appropriate time to move up.
They're growing and they've expanded and they get bigger and bigger, and it's like, it's amazing.
Yeah.
And it makes me wonder if I should have gone into tax accounting, right? But they do a great job. And I couldn't have set up our shop properly without them. And they're a good source of advice.
Yeah.
But I find myself constantly asking, as a country, have we overcooked this level of administration on business?
Yes.
We have, right?
We have.
Yeah.
I think we have. It's impeding business people's ability to grow. Red tape, administration, things like simple lodging a tax return and preparing financial statements. It can be really daunting for a lot of people to do their annual compliance.
Yeah.
And a lot of that does come down to, for example, not having robust IT systems. You'd be surprised there are people running multi-million-dollar revenue businesses that are still bookkeeping using Excel spreadsheets.
I'm not at all surprised by that.
And there's nothing wrong with that.
Yeah.
But there's a certain point in time where
you've got to migrate.
The investment in a system, and there's a lot of accounting platforms and systems out there that are subscription based, $20 a month or something like that, and it captures all the information you need. And the best part is it captures it in a right way that you can extract the data you need.
Yeah.
To manage your business.
Or your accountant can extract it for you.
Or
right?
your accountant can extract it for you. You're right, because these days with technology and the way it's enabled people to be anywhere and do their books, and the accountants can jump in, with the right login and passwords and access it all and fix it up where needed. So they're working in real time to get these accounts in order, so that when it comes time to do your compliance and your taxes, it's essentially pressing a button and the data should all be there and it's all automated.
Yeah.
And you don't need to go through all those headaches of shoebox accounting.
Well, that's the thing. I look back. I mean, not so long ago when I was in a firm actually, and my then assistant used to glue all of the receipts that I had got onto a A3 sheet of paper, photocopy it, and then lodge that as part of the sort of expenses regime, right? And I used to think, what an amazing waste of a resource to do that. Somebody who's highly qualified, can do anything, is wasting time on this receipt nonsense for like a $50 cab ride or something. This is ridiculous.
That's right.
But my advice is the ATO is cracking down on these sorts of expenses, and they're now bringing in AI to assess whether receipts are attached and all this sort of stuff. Like it goes back. I guess it goes back to my question. We certainly want, as a country, I would have thought to, and I'm going to say something contentious here, we want to pay more tax. We want to pay a lot of tax, right? But we want to pay a lot of tax on the basis of an amazing amount of profit, right?
That's right.
We want to generate more and more and more profit, and that profit should be taxed, and that's perfectly fine.
Yeah.
But taxing a shrinking pie is not the pathway to success.
No, it's not. No, it's not. Because look, we all value services that the government provides. We all, value good roads and hospitals and good education. So from taxes is essentially a social contract between all its, all the inhabitants of a nation. So what we want to ensure is that the tax system is fair. It is not overly burdensome, and people just voluntarily comply because they know it's the right thing to do. And the important stuff is the integrity of the people operating within the system. Now, I must say, in Australia, I find, with the clients that I work with, our clients really just want to do the right thing. And a lot of that is driven by self-interest, because a lot of them say to me, look, I just want to sleep at night.
I don't want to go to prison, okay?
Don't want to go to prison. I don't want to pay penalties. I don't want to spend time in an ATO review or ATO audit where I'm paying advisors exorbitant fees to sort of fix my affairs. So I just want to do the right thing and then not have to think about tax. And that's the best way to deal with tax, not to think about it. Okay, you can plan up front to make sure that your business is structured properly, tax efficiently, so you're not paying more tax than you need to, but you're not underpaying and risking ATO audits and penalties. So you want to do the right amount, not too aggressive, and just sleep at night and focus on your business. Focus on growing your business.
I think that's right. I mean, I certainly from our perspective, I say to my business partners, my gosh, we've just got to deal with this stuff so we can focus on our clients and focus on the work we actually love doing. That's the main thing. We got into this because we love doing it, right? We love advising clients. We love doing transactions. We love doing that sort of thing. So the tax compliance and government compliance, I think that's part of doing business. I accept that. But I want to just take you back a little bit to your point about the social contract, because I totally agree, right? That is, the government doesn't have money. It takes the money from us as companies, as individuals, in value-added taxes, so it can reallocate that to make sure that we provide ourselves with a standard of living that we as a society choose to purchase. That is the contract between a society and government, right? This is a territory I'm far more comfortable on now, given I've had a career in government, is the balance has got to be right. And one of the things we have debated on this show quite a few times is, have we got the balance wrong? So we're at a situation now where I would argue PAYG taxpayers are now being asked to contribute more than ever before, and our biggest share of the tax take than they probably should be in this country. We have an excellent standard of living, but we're paying for increasing amounts of care services that aren't being offset by productivity increases, which means that we are asking a shrinking taxpayer base to pay for more and more services to cope with a care economy that, as a society, we all agree we should have. But we need to ask ourselves whether we can afford in its current structure. And I mean, it's no secret that as a community, we're all looking at the NDIS. And if you ask anybody, should we look after those less able than ourselves or those who are disadvantaged, the automatic answer is yes. If we then ask the same person, should we set up a scheme to support, under 600,000 people at a cost that of more than Medicare that supports 27 million, I think the answer probably would be no. And yet that is the system we're in now. And we pay for it by a series of taxes and levies and charges. And every time the government decides to do something, they introduce a new levy, right? So I guess my question in that whole narrative is our tax system balanced properly?
That is a very difficult question, and I'm sure if you ask 100 people will have slightly different views. Okay,
Yeah.
I think we can all agree that yes, we want to support people with disabilities. We want to support our aged population. We want to support people getting back on their feet that don't have a job. So I think everyone agrees that all systems should be there. Now, your question went to, for example, disability support and the NDIS and the sustainability of the scheme. And I personally think, because I do have a child that accesses NDIS, I think sustainability is vital. Okay, and it is concerning to see the statistics that say this area of government spending is going to outgrow and outstrip Medicare and age pension. So that is concerning for me personally, because that implies that this scheme is not sustainable. And we all agree it's necessary.
Yeah, everyone agrees, right?
Yep.
Yeah.
And it needs to be sustainable. So how do we make it sustainable? Well, a number of things probably need to happen in that respect. One is, we talked about the word integrity. There's probably integrity issues around how the money is being spent. Is it being spent on the right things? Or is it spent on the appropriate things? And we've seen, press clippings recently about how those sort of issues are really bubbling to the surface now. So I think the NDIS, probably like the ATO does, is focused on focused on compliance. There should be a greater focus on compliance and integrity. And that could potentially rein in a lot of this ballooning effect so that the money is directed to the right purpose and the money is spent in accordance with the rules. Now, the NDIS is a relatively new scheme. I mean, taxes have been around for, since Federation.
Right. Yeah.
The NDIS has only been around for, I think, less than 10 years. So
it'll adjust over time.
Hopefully it'll adjust over time and become more sustainable. And because it's it's a relatively new government agency that's regulating it, so over time, hopefully those integrity issues will be sorted and be fixed, and hopefully it comes back onto a more sustainable path.
It is interesting. I was speaking to an old doctor some time ago. We were having this discussion, and he said when Medicare first started, it was the same thing. Medicare just ballooned into this thing that was going to eat the government, and eventually they reined it in. So I think you're right. I think NDIS will go in the same direction. But I think our point here in this discussion is we agree we have to have these services, but I think the pressure on PAYG taxpayers is intensifying. And I actually wonder if that's actually driving people to start small businesses. Right? So one of the things I was thinking about when Lily and I were talking about this was I look around now, and I don't know whether it's a generational thing. When I first started in work, the idea of working for a large corporate was like, yep, I'm going to go in there, I'm going to join one of the big four, I'm going to, build a corporate career. You speak to young people now, and they sort of go, well, actually, I want to start my own business. I'm going to follow a tech world or start a little startup, or the the young lady who did our website runs two businesses. She builds websites and has a teeth whitening business. So I guess my question to you is, are you seeing more of that sort of thing happen now in the sort of business world? Are you seeing the children of your clients start their own little businesses and say, hey, Andrew, I'm setting up my own thing. I'm going to do this startup?
Oh, absolutely, absolutely. Look, you're right. The traditional career path of leave school, go to university, get a good job, and progress up the ranks in an organisation is sort of losing flavour, I think. And as part of the next generation, I see there is more coolness in being entrepreneurial. It's more acceptable to take risks early on in your life and your working life especially. And because people are hearing about, all the, tech entrepreneurs out there, and it's, to be honest, it's quite inspiring that you could, set up a business in the garage of your parents' home and become a multi-billion-dollar business, and you could float it one day and things like that. Now, we all know that in reality, that's a very small percentage of startups that get to that phase. But nevertheless, people are giving it a go, which is great. And this is where you're talking about PAYG people.
Well, yeah.
And then businesses, and this idea of leaving that safe job, that that safe salary, that the definitive amount of money that's going to hit your bank account so that you can do what you want to do and it's safe, versus going into business where you become the owner, you become the entrepreneur. Nothing is guaranteed. It falls or rises based on your own efforts. Sometimes not even your own efforts, your own luck.
Yeah.
So yes, there is that I see more people willing to move away and more people willing to take that leap of faith, I suppose. Kids in university these days jumping out and doing startups. They have some great idea, and especially with technology that enables a lot of this.
Yeah.
We might get into AI and all that a bit later, but those sort of new technologies, I think, are fueling the inclination of these people to sort of jump in and try and start these businesses. Now, some of these young kids are lucky. They might have family that will say, here's $50,000.
Yeah, a lot of them, like the family will back them.
Something help you out. They might have family and friends that could test the market for them. Not all of them work out in the end.
Yeah.
Some people might go back to employment, or they might start their next venture. But what's encouraging is to see people giving it a go, because you never know. You never know. Yeah.
But it goes back, I guess, to my question around, as a country, we talk a lot about the stuff, we want to, Malcolm Turnbull, when he became Prime Minister, talked about the innovation nation, and we're going to have, this is our future, and he suffered he didn't perform well in that election, partially because I think people heard that vision and said, yeah, I get it, we're going to be this entrepreneurial nation, we're going to be we're going to be at the top of the tech revolution, which he's done very well at. But where do I fit into that? What's my role in that? What's the role of my children? Because I think of so many of the businesses that have been set up in small business world. They are service driven, there's no doubt about that. But a lot of it is around things we use every day: food, a nail salon, a barber shop, a small supermarket. The majority of small businesses are in that realm, right? They are the ones that contribute a lot of employment, right? But they don't fit in that sort of startup world. So I agree with you, like the percentage of, when we think of the sort of new small businesses that are coming up, we think a lot of these sort of, it's a garage, it's black t-shirts, it's a whole bunch of computers, and off we go. And everyone's inventing a new AI chatbot that's going to sort of save us. And we should get to that, because I think that's really interesting. But is it the case that we should be encouraging people to start more small service-based businesses in the way we set up our tech system, like the corner shop or the restaurant or whatever, because that employs so many people? Or is this just nostalgia for a day for years that have gone by?
I find that they are sort of dwindling in number, and my personal observations is that it's probably the advent of large, call it shopping centres, where everything is moving in together into large spaces. So the corner shop down the street do struggle.
Yeah, the high street has suffered because of the shopping centre. Yeah,
high street. Yeah, you're right. There will always be a place for those businesses in one way or another. Now, I've seen a lot of these sort of businesses on the high street or just in the suburban shopping strips being taken over by the next generation. A lot of new sort of food businesses have sort of started up, utilising mum and dad's old recipes, but giving a modern twist.
Yes.
Maybe adding some fusion flavours in there. Those sort of new ideas and new offerings are quite exciting. They are getting business. They are getting a lot.
Yeah, you're making me think of Lily Tran Baking.
That's it.
Is a wonderful
marketing.
Product.
Yeah, all that sort of stuff.
In fact, we'll feature it. Well, we'll feature it, Lily. We'll feature one of the biscuits.
Yeah, and look, and so small businesses, as you mentioned earlier, is the engine of the Australian economy. They are one of the largest employers in terms of when you look at the sheer numbers of people employed. And then I think to those people who are, having to work the long hours, because I grew up in a small business family, takeaway shop. You, the owner, you open the shop, you close the shop.
Did you work in the shop?
Oh, I did.
Yeah?
Peeled many potatoes in my schooling years.
Yeah.
I think Lily did too.
Oh, did you? Is that right?
Yeah. And so we know that, small businesses are, very family oriented. There's a lot of child labour that is used.
Yeah, absolutely.
But
I worked in my father's business.
Yeah, that's right. And you think back and go, what great training that was.
I'm not sure how useful I was. I was there during summer holidays. Yeah.
I'll peel a potato and then I'll drink a Coke or something like that. So eat all the profits. But that is, again, the backbone of the Australian economy. And I think, those, like I said, there's always be a place for those businesses. But what I'm seeing is, as an example, there has been, small bakeries that I've seen in that I know of that the second generation have taken over. But then they say, look, we know this business because we've grown up in it.
Yeah.
But why don't I take the same systems and processes and just open another one in the next suburb?
And so they pivot the business.
They're right, yeah, because they understand businesses are just a collection of activities and systems. And once you understand that and you've got a mindset of replication and scaling, then that's how I think you can become very entrepreneurial, utilising the knowledge of that business and the customer service aspects and the good delivery aspects and so forth. And you've got a great product, but hey, why don't we scale? And
I love that. I love that concept of the next generation recognizing that we've got a great product. How do I scale it? Because that's actually, again, our whole world is dominated by this technology discussion, right? And I'm the first to say that I'm not a tech guy. I like using it, but I wouldn't suggest I'm going to be someone who's going to go out there and invent some technology. But I do love business, and I love that concept of we're looking at any business as a set of activities and systems, and how do I scale it? I think that makes a tremendous amount of sense.
Yeah. And that's what I find the difference between someone running a business. Running that business as though it's a job versus running that business as though it is a business.
Yeah.
Okay? Because there's a difference there.
So it's a perspective thing, right?
It is a perspective thing. I think in my parents' generation, it was a job.
Yeah.
I could be working somewhere else for someone else in a factory, but I want to be working for myself. But I am tied to the business. I do need to be there to open. I do need to be there to close.
Yeah.
So in effect, it's a job wrapped up in the construct of a business. Whereas I find that learning through my own clients' way of thinking, their mindset is to be a true business, you need to have, again, those systems and those activities mapped out, and you can replicate that. And so you have to have that entrepreneurial mindset that says, I can take myself out of this business today. I can go to the beach and do what I want to do, but the business will run because I have the systems in place. I have the employees in place to manage it. I know it's not going to crumble when I'm not there.
Yeah.
That is, to me, what a true business is.
But that's the trick, isn't it?
That's
the trick, right? Yeah. All you got to do, I've got a great advice for all you do is go onto Instagram and just scroll up to one of those adverts, and there'll be a guy on the beach telling you that he's earning $400,000 every minute at the moment. So Instagram is a solution.
I'm sure there's no shortage of those.
I see these guys, here I am on this beach, and if you want, tune into this masterclass, and I'll teach you how to be a gazillionaire.
Give me $2,000 for this course.
I know. But you are right, though. One of the things I think about us as a country, and I think about, I'm a kid from Hong Kong. A lot of Asian culture, in my experience, thrives on this sort of entrepreneurship, right? And my background is Indian. Again, Indian people are quite entrepreneurial. I often think it's because they have to be. It doesn't have, India is a growing country, but it doesn't have the welfare safety net that we have. In my hometown, Hong Kong, very wealthy city, but in fact we just had Wayne Porritt on the show who talked a lot about Hong Kong. We had a great fanboy discussion on Hong Kong, but we both recognized that it was a city of two worlds. There's quite a large gap between rich and poor, and the city has the same strains on healthcare, on education, that we do here. I do wonder sometimes whether, going back to our earlier conversation, whether our focus on our own standard of living comes at a cost of entrepreneurial thinking. Yeah,
we're getting very philosophical here in a sense, which I like.
I didn't say this was an easy podcast.
You're right. There is.
You didn't want to talk about tax. Let's talk about philosophy.
Look, my take on this is yes, we are a nation of PAYG earners, and that's not a bad thing.
No, it's not a bad thing. It's not a bad thing.
It's not a bad thing because there is this, from a government tax perspective, PAYG is one of the easiest parts of the tax system to administer.
Absolutely.
Right? Because employer takes care of the tax. If I have to pay an employer salary, I withhold the tax. The tax office gets it very quickly.
And it goes into all of our products and services.
That's right, and that's the government revenue. Yeah. It's very certain. The tax office generally doesn't need to scrutinise business expenses. Is it deductible? Is it not? Salary earners are in that very easy basket, I think, for the ATO. Businesses is where it gets difficult for the ATO, and that's where a lot of the compliance activity actually is, because businesses takes care of their own taxes in the form of, they have to keep good records, they have to lodge BASs, they have to account for the GST, and generally on a quarterly or monthly basis. And that's not often checked by the tax office until a review or audit happens. Okay, so you could be months or years down the track, all of a sudden
you get a letter.
You get that dreaded letter. Oh my goodness, have I done everything correctly?
Please report to prison. Do not pass go. Do not collect 200.
That's right. And usually, in our tax system, there is what we call an amendment period, which is the period where once the time expires, and it's generally 2 or 4 years, that your taxes are sorted. Okay. And so that is the only real safety net for a lot of people. All right. But 4 years is still a long time, and that's a long time if you've got something wrong. If there's a shortfall in tax, that you need to go back and calculate their shortfall. There's probably likely penalties and there's probably interest, and that's a big hit that is unexpected.
It hurts your cash flow,
and it hurts your cash flow.
It sets your business back.
Absolutely.
And this goes back to my point about we want to encourage business. We want to encourage small business. We want to encourage all business.
Correct.
And we want to pay as much tax as possible on profits.
I'm saying we want to pay the right amount of tax. Not the maximum.
Well, that's right. We don't pay. Kerry Packer famously said in that wonderful Senate interview, which we should post, of course I minimize my tax, and anyone who doesn't minimize their tax should have their head read.
Correct. So you want to pay the right amount of tax.
Yeah.
You're right.
Yeah.
Because if you want to be donating to the government, go for it.
Yeah.
But not everyone wants to do that, because most entrepreneurs think that they can provide services better than
themselves. And most entrepreneurs, to be honest, are focused on their business. They're not necessarily focused on accessing handouts, right?
Correct. So you're right.
So let's get onto that quickly, because we're going to run out of time, and I know we are. It's very rare that I have an expert here who can tell people how to do things. So we're going to take advantage of you right now.
Sure.
Which is, I'm setting up a business. I've come to you. I'm like, Andrew, I'm an entrepreneur. I have this dream. I'm going to start making widgets. What do I need to do? How do I avoid setting myself up badly from the beginning that will hurt me forever? What are the things you'd tell me?
Okay. So the first thing is sort of what scale are you operating at initially? Okay. So are you just starting up with $10,000 in the bank that you've saved up? Or have you got an investor lined up that's going to put $2 million into your bank account and say, off you go? And by the way,
immediately you're talking about a difference in scale.
Differences in scale. And so the different scales will warrant different approaches. Okay, but ultimately, if you say to me, well, how do I start? The first thing I'd probably say is just start. Give it a go. Now, if we're talking about tax, we have to talk about legal structures, right? And most people know through correct Google, you can operate a business in your own name. It's called a sole trader. Just get an ABN and off you go. There are companies, which is one of the most common forms of business structure. Then there are trusts, and then there are partnerships. Okay, partnerships and individuals, I put them in the same bucket, because if you're on your own, you're a sole trader. If we go into business together as individuals, we're a partnership, right? But we pay tax in pretty much the same way. Companies and trusts are slightly different beasts. So a company is a business vehicle. It's a separate legal personality. Okay, a company has perpetual succession, which means it continues on forever until it's wound up. The shareholder has a limited liability in relation to the company, right? So when people set up businesses, they are concerned about personal liability, because
absolutely
your personal assets are on the line. So that's one of the
house. I've got children. I've got
absolutely.
How do I manage that?
So that's one of the main reasons why companies are a very popular business structure. Okay. Now, companies also have tax advantages in the sense that there's a lower tax rate, generally speaking. Okay.
Particularly for small business, right?
Particularly for small businesses, yeah. Company tax rates at 25%.
Okay. So that's a way of government's encouraging small business.
Absolutely.
Tax rate.
Absolutely. Yeah. What some people need to recognise, and this is where the discussion comes down to, are you growing the business, or are you using the business as a job where you're going to need to extract all the profits for your personal living? There's a key difference here. Yes, the company pays tax at 25%, but if you're pulling all those profits out for your personal expenses, well, guess what? That's a dividend to you.
Yeah.
So you'll then be taxed at your marginal tax rate on those dividends. Okay. The good thing about a company, though, is you're not taxed until you declare those dividends. So in the income year in which you declare the dividend, that income year is when you are taxed. So if you don't need the money, the profits from the company pays tax at 25%, and it can stay there, and it can be reinvested in the company. But if you need to draw the money out, that's when you need to be taxed. Okay, so that's one of the mindsets that we need to sort of impart onto our clients, that's the way the company tax system works. It's a two-layer system. Now, companies, like I said, are the most popular form of business vehicle, and one of the main reasons is you can introduce investors much more easily through
so that's your scaling.
That's your scaling question.
So if you need capital, then if you don't set yourself up properly from day one, it's difficult to bring in capital.
Correct. And look, in most investors if say I wanted to back you and you're starting up a business and you say, I'm going to start up a company, it's much more easier for me to hand you a bunch of capital, legally speaking, because that company can issue me shares and I can have some form of control or oversight of that company, given our corporations law. There's a robust framework around our rights and obligations in relation to the company. Okay, so that's why companies are very well known, very well understood.
And are you seeing most people set up as companies straight away?
Yeah.
I see very few sole traders these days, right?
Absolutely, absolutely. Companies are by far the most popular.
Which then brings in the whole administration question that we've been talking about today.
That's right. That's right. That's right. That's right.
Yeah.
And then we have trusts. So trust is one of those very interesting types of entities. Now, a trust itself is not taxed per se. Okay, it's what we call a tax transparent entity. It's a flow-through vehicle. So a trust makes profit. It can make profit. So if you're running your business in a trust, it does make profit, but it has to distribute that profit
to its beneficiaries.
To its beneficiaries, and it's those beneficiaries that
and they get taxed at their marginal tax rate.
Yeah, precisely.
Yeah.
And look, trusts have and the asset protection benefits also, because a trust is technically separate from you. So if a trust runs a business and it gets sued, it's a trustee that is liable, and they have recourse to the trust assets, but not you personally.
Yeah.
So
it's just that extra layer of protection from an individual versus a company structure.
That's right. That's right. And then so those are the four or so sets of types of business structures, and then we can get into more complex structures where you can have companies within a group. So you can have one company owning another company, and there's various reasons for that. You can have large corporate structures where you have a head company and many subsidiaries. You can
and that's when you employ an entire legal and accounting department within your firm, right? Absolutely.
Absolutely.
So what you're saying is hire a good accountant.
Hire a good accountant that understands all of that. And look, we have then trusts in the mix. So you can have those corporate groups, but you can also have trusts that owns the corporate group. So the family can control the trust.
The family trust component.
Correct. So you have that asset protection mechanism, because you've got the trust that owns everything, and the family controls it and controls all the distributions out to the family members.
So I'm thinking back a bit to the example you gave earlier of the child who takes over the family business and chooses to pivot and scale.
Yes.
If you're going to do that and say set up multiple shops, right, that is exactly when you go and see an accountant, don't you? Because you say, look, all right, I own this family business, it's this one business.
Yes.
I want to make it 10.
Yes.
What is the right structure to do that?
Yes.
And that's when to draw it all back to this whole question about how you manage your affairs properly, if you don't set your systems up early, you will get into trouble later on. This is what you're really saying.
Yeah, absolutely. That's precisely what I'm saying.
Yeah.
Understand where you're going with this business structure, because what we haven't talked about also is succession.
Yeah.
How you pass control over, not maybe to the next generation, or even to a new buyer,
or exit,
or a partner, or exit.
We haven't even scratched the surface.
We haven't scratched the surface of that one. Passing control is a major one.
Capital gains tax is also a very interesting one.
Capital gains tax. Small business. There's this wonderful area of the Tax Act called Division 152, which is about small business concessions.
Yeah, right.
And what that says is ultimately, if you qualify for all the concessions, you can actually sell your business tax-free.
Oh, really? Wow.
Tax-free.
I didn't know that.
Zero nada. You keep the entire proceeds of your sale. But where we find shortcomings when people try to then access it is not having the right structure in place up front.
Up front, which means when it comes to that,
and when you don't think about it up front, and you're in the wrong structure, or there are conditions that are not met just because you simply weren't aware of them. And that means the difference between 0% tax or 47% tax.
Ouch.
And if you know, if you've been working in a business and about to retire, it's, you know, your life's work, and you're going to sell for, say, $5 million. Paying zero tax and you keep $5 million and offer a nice retirement versus half of that going to the tax man, that's a very big difference to you. And so these small business concessions can be a bit of a minefield, especially if you have complex structures, but with the right planning and foresight, you can have it set up in a way which you know that if a buyer comes and knocks on your door, you are set up correctly and you can sell correctly and keep more of your proceeds as opposed to paying half it to the government in tax.
Well, that's great advice, Andrew. And I feel like we've only just scratched the surface, but unfortunately we've got to end. So it's been a real pleasure having you on the show. I've really enjoyed our conversation, and I hope you'll come back sometime and tell us more, because I'm sure next time you come on, you can tell us some stories about some of the things you see out in the market. Right?
Yeah, no, absolutely. Thanks for the invite.
Yeah, thanks so much.
It's been enjoyable.
Andrew Lamb, thank you so much for being on the podcast.
Thanks, Jason. Okay.